some by law, some by practice, for doing valuation for shares. We have so many methods, as we know that price earning method, future method, and erstwhile CCA guidelines, still we are applying certain things. So for valuing shares, at least we had some guidelines, some parameter. For listed companies, SEBI has prescribed weekly, 2 weeks low and 56 low, all these parameters prescribed. But for valuing assets and goodwill, there is no precedent, no guidelines is so far prescribed. And the government has to come out with a detailed guideline for that, for some reference at least, like how we have for valuation of shares. Otherwise, which will lead to us to judge this is correct, fair valuation. Otherwise, as you said, somebody will feel that, as you said, for you it may look beautiful, and for me it may not look beautiful figure, what they are signing. What is the solution for that?
Just to respond to Dhanapal, that's where they want to bring valuation standards. So we have to wait and watch.
Does it mean valuation standard will target for each and every asset which is going to be for tangible, intangible both?
Not only existing tangible, intangible. Future contingent liabilities also are to be valued, then only you must discount the future contingent liabilities present value and then arrive the net worth. So even the valuation is dealing with the past, dealing with the present, dealing with the future also is valuation. So that much complex is the subject, and valuation is having, for your information, the 3 different angles. We are seeing now the value. Accounting angle. So an existing running company also can revalue its assets. For revaluation also there needs to be a valuation certificate. It is permitted under the Companies Act. You can revalue, even a proprietary concern can revalue, though historical costs you are following. A partnership firm can revalue its assets. No capital gain, nothing is there. So taxation aspect, when you are selling the shares, when you are receiving, is it having a taxation angle? So a professional body, when you are giving a professional advice for this much value, you please transact. Is it taxation angle correct? Is it accounting angle correct? Is it the legal angle correct? So all these things have to be taken into account.
So therefore the business valuation also will be coming within the purview of valuation.
Yes, it's good to come.
Registered value along with chartered accountant.
Yeah, RV Udaya Kumar, right?
Chartered accountant and registered valuer can use the designation, because the person, the chartered accountant who is in practice, is not allowed to use other than chartered accountant designation. Now, as per this act, a chartered accountant can become a registered valuer. Can we use chartered accountant and registered valuer?
The answer lies in your question, sir. Number 1, if you are a practicing chartered accountant Act prohibits you to use any other designation. So even if you register as a registered valuer, you can't claim that you are a registered valuer by a board. Number 1. Number 2, if you are not a practicing chartered accountant and you are a registered valuer, then you can use names.
How the public can know at the time a registered valuer?
CA VMV Subbarao is enough, sir.
Not, sir, not.
Supplementing is concerned, I believe ICAA permits part-time practice also of chartered accountant. The purpose of permitting part-time practice is that the professional can also engage in something else. Otherwise, there need not to be a concept of part-time. When that be the case, as is concerned, we can be allowed to do as other registered valuer.
No,
I am telling only for ICAA.
no, for part-time practice, they cannot do attest function. No attest function. You cannot attest a balance sheet.
He can be a consultant. Without any consultant. There is a purpose.
Tax consultant, tax representation.
No, salary, he drops it as a consultant. That's why many people take part-time certificate of practice. It is of no use.
Sir, in explaining the provision for valuation, you are explaining that the requirement is that the chartered accountant has to be in full-time practice. So perhaps part-time practitioners may not be eligible to even register. Get them registered.
Correct, sir. I agree, sir.
That's why they have. Already it's there.
No, we have to wait for the institute to come out with some guideline along with the chartered accountant and registered valuer. Can we put will be the first query asked by Subbarao to the council. We will get clarification, sir. Yes, we will ask. Correct, sir. Definitely. Board is not enough.
Any more questions? We'll continue with our panel discussion now. I request CS Thanapal to come up on the dais and join for the panel discussion. Ladies and gentlemen, the purpose of this panel discussion primarily to discuss on emerging issues under the New Companies Act of 2013 with special focus on Section 185. The floor will also be open to any other questions relating to Companies Act of 2013. Over to the panelists.
Right from yesterday morning, there are total 9 subjects. The queries are open on all the, maybe to start with, Madam Lakshmi had one query morning which was not answered. That's a question to Dhanapal.
I want to ask a question to Smita.
Little more. Smita, so one more chair. Hello.
Nowadays we are started a private limited company, minimum number of 2 directors. They are the promoters, they are the directors. If one director has been resigned, what is the status of that company?
If one director
Is resigned, what is the status of that company? It is going to the one-person company, or
ma'am, one-person company is a single member, not a single director alone. It's primarily a single member.
we are started a private limited company. They are the promoters, they are the directors, they are the members also.
Mm-hmm.
There are only 2 members. If one person is resigned, what is the status of that earlier private limited company?
You're basically telling that one person goes out of the company, out of the 2
Yeah.
subscribers, 2 members, one person goes out of
Can
the
I
company.
Yeah.
Fine, you can take.
No, it is a single line answer. The company will be prosecuted under section 628 for violation. Okay. A private company which is registered cannot in any scenario become a one-person company unless the one-person company can emerge only by registration, not by default of any conditions.
If it is being like that, the company is being wound up.
It's a violation. It's a violation under 628. See, there is a provision under section 45 of the Companies Act where minimum number is less than the statutory. In case of private company, less than 2. In case of public company, less than 7. If the company is run after reducing less than member, then all the members is severally liable personally. But there is no such provision, equal provision, when the director is coming down. Automatically, it will trigger the provision of section 628, where you will be liable if the company runs with one director.
Sir, a small company under section 285, what are all the other privileges? You were discussing about the procedural aspects like non-maintenance of a lesser number of board meetings and certain other procedural provisions. What are the other rigors from which they are exempted from, like the rigors of the S12 section 297 or whatever? Is there any other privilege they can claim?
As morning Mr. Arvind Pandian was referring, in case of small company, amalgamation between 2 small companies, it doesn't require court approval. In case of National Company Law Board Tribunal, doesn't require National Company Law Board Tribunal approval. Is it sufficient if regional director approval is taken? That is one advantage in scheme aspects. Other than that, not so great advantages available to small company. I can rather say a small company, the appointment of auditors more than 20, that is not applicable to small company. And another is annual return certification. You can carry on.
Excuse me, sir. Sir, as per section 185, loans and intercorporate loans, earlier we have given before commencement of this act, that those loans to be refunded before this financial year end?
There is no express specification provided in the Act that it should be refunded within the. Some contract already executed, the new law cannot invalidate the contract which is already executed before the law becomes effective. Taking this premise, the contract which is already executed cannot be curtailed. Probably they can give the timeline up to which that practice can be followed. Since there is no timeline provided under section 185, it can be presumed that the loan, that transaction can be prolonged till the period of the contract.
Suppose I want to
Original.
correct the objective clause stating that one in the regular course of business.
No, sir. I have to explain that because everyone is getting concerned on that or confused on that. See, it refers NBFC companies. It says that the company in ordinary course of business it gives for the loan. That should not, and they should not charge the interest less than the bank rate. So it's a saving clause for the NBFC companies.
Second point, sir, I think with respect to the new project acquisitions, most of the business units will be acquiring for the future business purpose. Where it involves, we'll be buying the project for the, where some of the physical assets will be there. Based on the certain physical assets, we'll be anticipating the business in future. That valuation will be involving two people. One is with respect to the chartered engineer, second one is financial person, either a chartered accountant or somebody else. The interaction will be, how it will be, any impact on the subsequent performance of the business or the assets. The problem will be for the two people or the only one person will be there.
Actually, it's a very practical question. Today, how it happens is, we say it's a buffet. We say, sir, you take this and you tell how the taste is. You take this and you tell me how the taste is. This is how happening today. Sir, these are the 4 assets you have to value, sir. These are the other assets you have, sir. Stock you value, shares you value, the current assets and all you value, maybe the goodwill you value. Goodwill is a word engineers may not understand. Plant and machinery is a word engineers will understand. In the electrical fittings, engineers will understand. Now, coming to a new item called the company will say, sir, there is one more asset you have left out. That is called brand name. I have a very big, whenever a bottle without a Tata, I sell it as 10 rupees. With the Tata, it sells for 18 rupees. So, brand has a value. And our friend at Infosys, Narayan Murthy, will say, no, in AGM I said there is one particular asset is not valued in my balance sheet at all. They are my employees. So, there is no end for it. Today, it is happening that the engineers are valuing at the method what they understand and what they follow. And they say it is traditionally we have been following it, conventionally we have been following it. My institute has advocated it. My institution of valuers, the 25,000 professionals, they accept it, so we go by this. And nobody challenges it. Nobody, and they give every valuation report, they give the facts, they give the basis, they give the documentation they have seen, and they say this is the value. So this is how the valuation report practically will be. Yes, at present this is what is followed even for the new company prospectus also. It is, what you said is a fact.
Sir, I just wanted to know, loans to directors, what are the accounting and the other implications on loans to directors? I think probably the chartered accountants can really explain shortly. What are those things? Especially in the new Companies Act, loans to directors, what are the accounting related implications?